VXUS and IXUS are two popular index funds for the total international stock market outside the US from Vanguard and iShares respectively. Here we'll review their differences, similarities, performance, and why you might want one over the other. VXUS and IXUS are two low-cost market cap weighted funds that capture the same segment of the global market, stocks outside the United States. VXUS is from Vanguard and IXUS is from iShares. For US investors not already using a total world fund like VT, these two provide a quick way to get broad exposure to markets outside one's home country. Let's talk about international stocks in general for a second. Why would you want either of these funds in the first place? If you've landed here, you probably already know that index funds are a great way to get immediate, broad diversification across all sectors of the stock market, and that it's likely wise to diversify beyond the borders of one's home country. You also probably already know that both Vanguard and iShares have solid track records of providing highly liquid, low-cost index funds. So first, VXUS, the Vanguard Total International Stock ETF. The fund launched in 2011 and seeks to track the FTSE Global All Cap ex-US Net US RIC Index. Its mutual fund equivalent is VTIAX. IXUS is the iShares Core MSCI Total International Stock ETF. It launched in late 2012 and seeks to track the MSCI ACWI ex-USA IMI Index. So what's the difference? Note that for all intents and purposes, these funds can be considered basically identical. The tiny variations that do exist are very subtle. First, VXUS is about twice as popular as IXUS with nearly $50 billion in assets. This makes sense, as Vanguard is typically the go-to for broad index funds like these, and VXUS also launched first by about 18 months. Secondly, VXUS tilts slightly larger than IXUS with a weighted average market cap higher by about $500 million. That is, IXUS has a tiny bit more exposure to small caps. Thirdly, IXUS has historically paid a slightly higher percentage of qualified dividends and could thus be considered ever so slightly more tax efficient. If using this pair for tax loss harvesting, I would put IXUS in the taxable space. Lastly, VXUS could technically be considered more diversified with about 8,200 holdings compared to about 4,200 for IXUS. We could have a bit more discussion if one of these were cheaper than the other, but these two funds have the same fee of 0.07% or 7 basis points. These funds have traded off years of outperformance. From IXUS's inception in 2012 through 2021, VXUS has slightly beaten it on return, but with slightly greater volatility and a larger max drawdown. Thus, their risk-adjusted return has been identical. In conclusion, since VXUS and IXUS have the same fee, this is not a decision to lose sleep over, and you can't really go wrong with either. They make a great pair for tax loss harvesting, and I would probably use IXUS in taxable. A choice between these two probably simply comes down to your personal preference of provider. What do you think of VXUS and IXUS? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.